Hello and welcome to your weekly GoNoGo show. Today is August 9th, 2024. My name is Tyler Wood. I'm a CMT charter holder, and as always, I am joined by the illustrious Alex Cole. How you doing, my friend?
Very well, thanks. How are you?
I'm doing great. I mean, markets are basically flat for the week, so there's not a whole lot to talk about, right?
Yeah.
We're
Goodbye, everybody. Thanks for
Yeah,
watching.
thanks for tuning in. Nothing to report here. Hardly the case, but we did recover after a massive volatile sell-off on Monday. VIX above 55. Alex, let's walk through our process from the top-down approach. We're going to cover the asset classes. We're going to get into the indices, and then we're going to get into sector groups and some individual securities for you here on today's show. Talk to us about what's happening across the asset classes.
Yeah, so as you said, we had a really big drop on Monday and gapping lower. So you can see that the top panel of this asset class map is equities, and you can see that we are in a no-go trend. So we had that string of 5 purple strong no-go bars, and then today we are now painting a pink weaker no-go bar. So we've really rallied since falling so hard at the beginning of the week. So we'll look at what that means in terms of important levels and whether we'll find resistance going forward next week, but definitely a strong rally this week. Treasury bond prices in the second panel, we can see that those are in a go trend, but we've seen that go trend weaken to paint aqua bars. And then the third and fourth panel, we're seeing no-go trends for U.S. commodities index. And we'll break some of those apart, look at some of the individual commodities as well, of course. And then the dollar hanging on to a no-go trend. So the dollar's been interesting. We'll look at that chart, but you can see all of that uncertainty a couple of weeks ago, and then now we're going back and forth between purple and pink no-go bars. So still a no-go for the dollar.
Absolutely. As we show all of these heat maps, what we're doing is just stripping out the price action and showing you the trend conditions, and it gives us a lot of information at a quick glance across all the major asset classes to understand what is trending on an absolute basis. We'll always try to point out when we're looking at a relative strength heat map versus an absolute trend. But Alex, let's turn our eye over to the U.S. equity index, the benchmark S&P 500. Get a sense of not only what that price action this week has looked like, but also where volume is at, momentum, and volatility.
Yeah, so this is interesting because you can see how important the next few days are likely to be. So, like you said, crazy volatility earlier in the week and a big gap lower. So no-go trend fully in effect. And then we've steadily climbed this week. So here we are now on Friday looking at a pink no-go bar, and we are coming right back up to levels, like you said, basically flat for the week or even a little higher than Friday's close. So we're right back up to these levels. But what we also know from our traditional technical analysis is that the concept of polarity tells us that what once was support may well be resistance. So we're also approaching these levels that have been support before, but once broken, as they were so significantly this week, may be a form of resistance going forward. And then what we will, of course, do as GoNoGo Charts is turn our eye to the lower panel. And what you can see here is that we really are at an inflection point, and the oscillator, which broke through the zero line ahead of this trend change, has retested that level and is testing it again from below. So what we're really looking at, if we were to break this down, go-no-go perspective, we're in a no-go trend. Oscillator is testing the zero line from below. And we know that if this no-go trend is to continue, then the zero line should act as resistance for the oscillator. So very, very important. If we get rejected here and the oscillator turns negative, we may well see price roll over and stay in a no-go trend. If we see the oscillator regain positive territory quickly or after a couple of bars at this level, then we may be putting some pressure on these lows and maybe even looking for some sort of trend change. You can see that scenario play out back here on the chart where we enter a no-go, the oscillator tests the zero line from below, and positive territory was captured fairly quickly as we broke out of this squeeze. So that's what we're looking for here. Any kind of resistance, the oscillator staying at zero or below in negative territory, then the no-go trend will be likely to continue.
Alex, everything that you're discussing reminds me of just how important time frame is. And so as investors, setting your horizon line, what is your objective as an investor, is going to help detail what's most meaningful to you in terms of the time frame that you're looking at on your charts. So right here, we're looking at the daily price action of the S&P 500. And in a no-go trend, it's guilty until proven innocent. So we're talking about being below what had been areas of support, potentially causing headwinds, areas of resistance as we reapproach or try to reclaim trend. But let's bounce this out to a weekly basis. Let's put Friday's sell-off and the massive follow-through and gap down on Monday into the context of perhaps what the longer-term, maybe more secular trend looks like.
Yeah, and this is that exactly what we're talking about. You can see we're at that inflection point again on the weekly. And depending on your context, of course, if you're of the opinion and if you're using multi-time frames and you're following this larger time frame, then you could be looking for opportunities to get back into this larger time frame when that daily no-go turns around. So right now on the weekly, we're seeing the oscillator testing the zero line now from above with weekly aqua bars. So we've seen this before. We saw it here in April and May. You can see we were just referring to that period on the daily where it recovered and entered a go trend again. So we could see that happen again. We could see this as a higher low, right? Until it isn't. This is just a higher low on the weekly chart. If that's our perspective, then the daily chart is going to then give us opportunities to buy back into that weekly chart as the trend continues. If the weekly starts to struggle, though, and we see this break into negative territory, we may see a deeper correction as we did here, and even possible trend change on the weekly chart as well. But as you said, the flip is true. The sort of reverse is true here. This is innocent until proven guilty on the weekly chart, right? This is a pullback unless we see the all of the things line up to tell us that it's a little bit more than that. So we could certainly be looking at that daily chart where we're out because it's a no-go. So we're risk, we've taken some risk off. We are protected from further downside action if that's what's to happen. But if the trend comes back, then we'll be looking at that as a sort of a pullback in this larger weekly trend.
Absolutely. Pullbacks and corrections in a downtrend are much more damaging and destructive than a correction like this in an otherwise healthy secular uptrend. Alex, let's take a look at a couple other things on the index level. We've talked a lot about breadth on this show and talked to a lot of our peers about some of the studies they're looking at. Why don't we look at the S&P 500 on an equal weight basis, ticker symbol RSP. And I think one of the things that is giving a lot of credence to the health of the overall bull market is that when you strip out the largest cap mega cap tech stocks, and you start to look at the performance of the average stock in the index, we certainly haven't seen an equal weight index carry through all of the gains that the S&P 500 has enjoyed this year, as it has been led by the very narrow leadership of those mega cap tech names. But when we look at the destruction in the S&P 500 this week on the daily time frame, not seeing that on an equal weight basis. So we can even just zoom in on this week's daily action. Much less of a severe sell-off for the average stock, but we're also back into go trend territory on the daily basis. Talk to us a little bit about what you'd like to see happen here.
I think the obvious one is that we'd like to see now the oscillator, which is already in negative territory, get back above the zero line. So this is the obvious ask, I suppose, if you want to be nicely bullish. We've seen the trend come back. We've seen that go bar, but we'd love to see the oscillator confirm that by getting into positive territory, especially after the uncertainty that we've seen this week.
Absolutely. And then let's take a look at the IWM, the Russell 2000, just for another look at what's happening across different constructed indices.
Yeah, I mean, the IWM is sort of in between in terms of what we're seeing on the chart. There was quite a bit of damage. You can see the price gapping lower, but we have rallied and we aren't as perhaps, well, I don't know. You tell me. If we're looking at this from a perfectly straight go-no-go perspective, I'm going to say we're in a no-go, oscillators below zero. And in this case, we're not even at zero yet, so we're still in negative territory. So we've got momentum confirming this no-go for small cap. And so I'd be definitely wanting to see the momentum rise a little bit. But you can see multiple levels where we could find some resistance. We're at the gap the top of the gap, and then we've got another gap here. So there could be some resistance if it climbs further.
Absolutely. So key takeaways: S&P 500 on the daily basis, still in a no-go trend, guilty until proven innocent. S&P 500 on an equal weight basis, we're still just looking at those larger cap 500 names, recovering at the zero line, looking a little healthier. And then the small cap index, the Russell 2000, still struggling to find a positive momentum standing and get out of that no-go trend territory. Thank you very much, Alex. Let's turn our eye to some of the intermarket forces at play. Let's start with a chart of the TNX. Speaking of things in downtrends, rates are on the fall here.
Yeah, and this is nice for people that are looking for that daily trend to recover. If you're thinking about the equity larger time frame trend as a go, falling rates can't be a bad thing. So yeah, certainly we're still making lower lows and lower highs. We just made a lower low in rates at the beginning of the week. We've rallied and we're in pink no-go bars, but below zero, testing it from below. So no-go trend definitely in place for rates, and we'll see if that continues this next week.
Absolutely. And you were talking about the US dollar also showing some weakness. Let's tune into the UUP, which is a dollar index proxy ETF. You get a sense of volume as well from this chart.
Yeah, this is an interesting one because there was a lot of uncertainty right at levels where there was sort of a clustering of support previously, and we rallied off those lows, but not out of amber go fish territory. And that whole time, the oscillator stayed at zero. So we were really looking at this last week to see what would happen out of this max go no go squeeze, and the squeeze was broken into negative territory on heavy volume, and that told us that this no-go trend was likely to continue. So now where we are is sort of below this level that we saw the support before, so perhaps now finding resistance at those levels. Oscillator has been turned away again, it seems. Of course, we are midday Friday, but oscillator, if it stays where we are, has been turned away from the zero line again, and so we're back in negative territory. So that tells us we're seeing signs of no-go trend continuation here after this most recent low.
Absolutely. Now let's take a look at a couple of those commodities charts that are also having an influence, perhaps. Let's take a look at gold.
Yeah, gold's been good. We gold for months and months and months, or years and years and years. We've talked about the levels that gold has been trying to achieve to break out of that very, very long-term pattern. But on this daily chart, you can see that we have struggled at these highs that you see on the chart. So what's positive and what's interesting is that we have fallen away from these highs, but we haven't lost the go trend this time yet. And in fact, this week we've rallied a little bit, partly due to the volatility. There are still some people that see gold as a possible flight to safety. And we can see that we've painted a strong blue bar so far today. Oscillator really struggling to get very far away from the zero line, either above or below. So we'll watch that closely, but at the moment, oscillator at zero, go trend still in place. If the oscillator can get back into positive territory, then we'll expect price to try to challenge for new highs again.
You know, it's a textbook investor behavior example here that at each time that it corrects off of those highs, which we're gold bugs are trying to see those levels broken. We're coming back in. Each new low is at a higher and higher point, right. And so that coiling effect, we're working our way through additional supply, and we'll like to see what that next run at those highs might look like. Certainly in a go trend, we'd like to see positive momentum confirming that, and some strengthening before another run at those prior highs. Now let's take our attention over to oil.
Yeah, oil has been struggling to get out of this no-go trend since it entered it a couple of weeks ago. We talked about how the go trend looked good, and then we entered this no-go correction, which really primarily was dictated by whether or not the oscillator could stay below zero. As soon as it wasn't able to do that, the go trend came back. But you can look and see that we were rejected close to those levels that were highs before. So definitely there was a lot of selling pressure up here at these levels. And then before this go trend gave out, we saw that oscillator tell us ahead of time that there was some negative momentum and some excessive selling happening, which of course then led us into another no-go trend. Having said that, we were not able to make a new low relative to these lows from June. So there's definitely some buyers down here and some sellers up here. So as we look at this no-go trend now and we see the rally this week, we're going to watch closely to see if the oscillator holds as resistance here at 0 again. If it does and rolls into negative territory, we'll look to see if price can move lower and threaten the lows from June.
Absolutely. And as we like to do, let's look at this on a multiple time frame basis as well, jumping this out to the weekly chart, just to get a sense of that that further coiled position of the price of a barrel of oil.
Yeah, the weekly chart shows that we've really been in a sideways period for quite some time. So, and you can see, Tyler, how narrow it's got lately, right? We're now within sort of the middle of this high and this low, and really haven't got far away from that sort of center line. So we've got a lot of space above potentially, and quite a bit of space below as well. So still, I guess the market's trying to make up their mind on oil.
Absolutely. And when we see that coiling taking place over multiple months, we know that the compression of volatility leads an expansion of volatility. We'll be looking for high velocity moves when this does finally resolve in a trending direction. All right, Alex, we know that commodities are underperforming. We know that treasury bond prices have been moving up, rates falling. Let's take a look at the equity index at the sector level. And here we're going to switch over to a sector relative strength heat map for the S&P 500, all 11 spider sector ETFs relative to the benchmark index. Just looking at the trend performance for each of those sectors. Last week, at the start of August, we went into greater detail looking at each and every sector group, but the picture has not changed dramatically over the course of this week. Alex, talk to us a little bit about out and underperformance.
Yeah, I mean, we really love looking at this chart when we sort of start our analysis, because you can clearly see the rotation out of these growth sectors. Well, for a long time, it was just technology, but the rotation out of these sectors into basically everything else as the market sort of prepared for the volatility that was coming. And you can see that now we are in relative no-go trends for tech and discretionary, and everything else in a relative go trend. And only financials in a strong relative go trend. But of course, remember that these are not pure trends. These relative go trends could be no-go trends because the market has struggled so much over the last couple of weeks. But on a relative basis, it is not technology and discretionary that's trying to keep the market afloat.
Correct. For portfolio managers, thinking about the best service they can do for their clients and trying to outperform benchmarks. By holding those sectors that are outperforming on a relative basis, you are going down less in a downtrend at the index level, or you are rising faster and higher in an uptrend. And so looking for that outperformance is the right way to think about security selection and asset allocation mixes. But we're going to dive into some individual securities and take a look at some of the perhaps outliers within each of these sector groups. I know it certainly started this week in a headline news frenzy about the market collapsing. Just listening to some radio and watching a little financial news media, it's amazing how much speculation there is about the Fed's decision to hold rates, about what's happening in a slowing U.S. economy. How bad is that jobs report? And I think for a lot of investors, the 24-hour news cycle is a serious disservice. We lose track of the context of what's happening, how big that is relative to prior moves, and what's most important, which is what's happening right in front of us. So Alex, let's go through some individual tickers. We just talked about how the information technology sector is underperforming a falling S&P 500, right? Do we hate all tech stocks? Well, the next level of analysis is to get under the hood, look into those industry groups, and then arrive at some individual names. Let's take a look at IBM. Long-standing blue chip mega cap firm for Ralph Acampora. When the CMT Association first started, this was the Apple of their generation, and what a resurgence with their work with Watson, participating in the AI revolution, but also having a very differentiated and long-standing company track record behind them. Talk to us about the trend perspective. What's happening for IBM right now? And most importantly, that trend continuation icon yesterday.
Yeah, and I love it when you find something doing well in the face of what's happening, because there must be a reason. And that goes back to the fact that, what's going on behind the scenes from a fundamental perspective or from a management perspective, these are all things driving stock prices, but we see it playing out in the chart as technicians. And so IBM, higher highs, higher lows, strong blue go bars, oscillator finding support at zero the entire time, is not the story of the mega cap tech stocks. And that's not what we're hearing. And so you can still find securities and reasons to buy. So I think it's always exciting to see a chart like this, because a lot of people sort of, I think, get a bit disillusioned with maybe the market moving as one, or saying, it's not a stock pickers market, but you can still find strength like this. So for GoNoGo Charts, we see a strong go trend on IBM and momentum continuing to find support at zero. So as you mentioned, this trend continuation icon suggests to us momentum is resurgent back in the direction of the trend, and we may look for price to make an attack on new highs over the next coming days and weeks.
Absolutely. Let's turn our eye to a utilities company. AWK is the ticker symbol. American Water Works, also in a strong trend. We saw utilities outperforming alongside the technology sector in that barbell distribution of leadership earlier on here in 2024. Talk to us about this trend for AWK.
Yeah, so we've been looking for utility stocks for a little while now, because, as you said, of that outperformance that started earlier than the other sectors. Now still a relative outperformer. You can find things like the water index doing really well. So this is a utility stock, American Water Works, and you can see that we are in a go trend. Now we're seeing weakness today, but you can see that there potentially should be quite a lot of support at these levels, and the oscillator continuing to find support at zero. Testing it again today, but yesterday bounced right off it. So if we can stay at or above zero, then we'll look for price to again make an attack at a new higher high, perhaps.
Do you think it was all the waterworks of those YOLO options holders on NVIDIA that really sparked this trend, Alex? A lot of tears on Monday morning, I think.
Either that or the non-stop tropical rain we've had for 3 days. It just means, I don't know, there's a lot of water to go around.
Yeah, maybe AWK gets paid based on the amount of rainfall in
maybe they collect the water and it's good. They've got a lot of supply at the moment. Who knows?
Moving right along, back to business. Let's take a look at ADP, an industrials sector name, business payroll support, business support services. What a bull flag right there, a pennant.
Yeah, exactly. So I was trying to drag the chart around to sort of show how choppy it's been of late, but this is a sort of clean technical pattern now. So once this level was broken, we really raced higher to these new highs. Of course, there was surging momentum. Momentum waned as it will, and now we're seeing that short-term pattern, that sort of compression of prices as the oscillator tests the zero line, found support. So we're going to look to see if we can get back into strong blue go bars here. And if so, we'd look for a run sort of similar in length to the run into the pattern. So that could be a nice gain, easy to understand risk versus reward on something like this. We're seeing a go trend in place. We're seeing a pullback. We see continuation from the green circle. So, easy to know where perhaps to set your stop losses and where you might be targeting for potential profit. So this will be an interesting one to watch this week.
So well said. I read some uninformed and rather juvenile financial news reporting in a British periodical years ago about the Brontosaurus pattern and making fun of pattern analysis. And all we're doing for anybody who's thinking about how to advocate for technical analysis is thinking about those breakouts and retests as a function of investor behavior. That is a natural proceeding, something that had been in a choppy range-bound mess. When it first breaks out, there's a lot of skepticism and plenty of short sellers and people unwinding positions, which is what forms the retest. And when that retest takes shape, as it's doing right here on this chart for ADP, we see that coiling of price action in a defined uptrend now post breakout, and a a breakout and a retest is such a natural thing in financial markets. Why not take advantage of those sort of repeating characteristics?
Yeah.
All right, enough of my soapbox. Let's take a look at HCA. Is our next ticker symbol. Healthcare, another stock in a nice breakout with trend being confirmed from the GoNoGo indicators, as well as a momentum retest.
Yeah, and you just again, without wanting to sound like a broken record, we do want to use traditional technical analysis when we look at these charts, and that's why it's so important to us that we put all of the technical analysis into something that doesn't clutter the chart. So just jumping off this chart, the support found almost to the penny from where the highs were here was a very, very good sign earlier this week. And when you combine that with the fact that the oscillator held the zero line, go trend has come back to paint strong blue bars, this is a nice sort of setup for potential new highs. And again, just from eyeballing this chart, this is one of those where we can see this is in a strong weekly time frame trend. This is in a strong trend. So these no-go corrections where you will be protecting from downside risk and reducing max drawdown, but looking for opportunities to participate in the larger time frame trend. So now we're putting all of that together, and we can see that the go-no-go trend on the daily is strengthened, and we're finding support at zero. So a nice looking chart for HCA.
Nice looking chart out of the healthcare sector. Let's take a look at Equifax, EFX.
Yeah, EFX is another one that has done what we were talking about just before, where it sort of made that jump to new levels. And once that happens, then we can look at areas of opportunity at support or trend continuation going forward. And you can see this uncertainty and volatility compression playing out here, where you had so many amber bars, you had such a long max drawn out go squeeze, that when that was broken on a strong blue bar that takes us higher than prior highs, that was the market saying, okay, we're prepared to pay higher prices for this stock. And of course, we've since then had some higher highs and higher lows, but we continue to test the zero line and find support. We pulled back a little bit here, so we're seeing that weaker aqua color, and now we're going to look for the trend to continue if we can continue to find support here at zero.
Absolutely. Now we've shown some alternatives, some names that perhaps not everybody was talking about. Let's pull up a chart of Apple. Warren Buffett's talking about exiting his positions. Certainly a very accomplished investor, and we know that everybody's got different time horizons and different objectives. But I think the news around some of the Mag 7 may be overblown. Let's take a look at what's happening from a price perspective and a trend analysis on the chart of Apple.
Yeah, and I think we kind of come full circle here. We're almost back to where we started with the S&P, where, yes, this doesn't look great on the daily chart, and certain things will have to happen before we can be confident that the go trend is back. But we keep it in context of the larger time frame chart, the weekly chart, and everything else that's going on. And what we can see on Apple is that we gapped down, really quite a big gap down to open all the way down here, but we've rallied ever since. And what we're currently looking at is an amber go fish bar. So there's some uncertainty with this no-go trend. Will it continue? We're actually now out of that no-go trend and painting an uncertain amber bar. But if we put all of the context around this on the daily chart, we can see that there may be resistance at the top of this gap. We can see that the oscillator is below zero, testing it from below. So at the moment, if that zero holds as resistance, if this level holds as resistance, that once, that's been on this chart now for a couple of months, we may still struggle for a little while on Apple. But to then put it in context of a larger time frame trend, perhaps we look for opportunities going forward as some of these things turn around.
Absolutely. Last chart of today. Let's take a look at Costco, consumer staples giant. Similar conditions, uncertainty, but breaking above the zero line with the go-no-go oscillator, perhaps slightly more constructive in that emergence of a momentum signal here at midday on Friday, August 9th. Alex, anything else that you'd be looking for in this chart to confirm that we might be able to hold on to that longer term uptrend?
Yeah, no, just what you're talking about. The break above zero is very important. I can see that we are in this area on the chart where there's a lot of activity. So, if we can get a little bit higher with the momentum push, then we certainly look like we might challenge these highs and get back into a go trend. But they're definitely slightly more positive than the other charts we've looked at.
Absolutely. So for quick summary, we've pulled out ideas in utilities, industrials, healthcare, financials. We've looked at consumer staples, and even in the technology sector, which is underperforming a no-go trend in the S&P 500, there are still opportunities. So it is not a stock market; it is a market of stocks. And if this kind of work is intriguing to you, and you would like to be finding more of these idea generation kind of setups, looking for GoNoGo conditions, make sure you check out the video that we'll link below, and it's right there on the Stock Charts blog. You can scan and screen for these tools across lots of platforms where you find GoNoGo Charts. It's a big part of what Alex and I do each week and every day, looking at sort of the overall picture of what is trending, what's getting that momentum continuation signal, what's maybe in an area of uncertainty or building a max squeeze. It's a great way to look across a wide variety of securities and instruments, all at a quick glance. So make sure to check out that educational, that tutorial video, and shoot us any questions you've got. You can reach Alex and I at info@gonogocharts.com. Tons of educational material on our website, and we're always looking to hear from you. What time frame are you trading? What securities are you focused on? And hopefully this elimination of analysis paralysis is helping you make more timely and accurate trade decisions. Thanks so much for tuning in this week. We'll be with you every week here on the GoNoGo Show. Make sure you like and subscribe and forward this to all your friends, as the kids do. Until next time, take care of each other and trade them well.